You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's cooking in the realm of futures options? Well, let's find out together, shall we? Time for a little bit of TWIFO. My name, of course, Mark Longo from the THEOptionsinsider.com. Back from a spring break hiatus. Hope you folks enjoyed the Volviews murder mystery whodunit that hit the feed last week during the day off that we all had, courtesy of the markets. A little bit of options oddities hitting you on a day for the pro folks, of course, on a day when the markets were closed as well. Monday, you got a taste of my chat with the folks over there at CVOL about all of the hot topics that are raging in the world of options, 0-day, of the options on the Bitcoin ETFs, what's going on with one-day VIX, all sorts of fun, and a whole bunch more. Tuesday, of course, the advisor's option, fun chat about all things options income, and a little bit of vol debate going there as well. Wednesday, of course, a little bit of the old OBC all the way through to today, where we're back live with a little bit of TWIFO. Remember, you want to see these reports for yourself. cmegroup.com/TWIFO is the place to go. If you want to join us on the pro, so you want to get access to all that fun stuff I was just talking about, all the live, you want to get your name in the hat to win the March Pro Trading Crate. Yeah, we're back live. We're going to have to give that away probably tomorrow once we get it all queued up and have all the new members who joined at the end of March added in to the tally there. Maybe we'll give it away on Volviews tomorrow. Could be fun. You want to get your name in the hat for that? TheOptionsinsider.com/pro is the place to go to learn more. As we go around the horn, see who's joining us on the old CME Group hot seat this week, I am pleased to welcome back our old friend, Mr. Russell Rhoads, the once and future and now present Dr. Vix, who's moonlighting over there at the Kelley School of Business. Mr. Rhoads, welcome back to the program, sir.
As always, very happy to be here. I'm actually, I did something very uncharacteristic and took a vacation last week.
Where did you go? I went to New York. Where did you go?
Went out to Phoenix and glommed off my in-laws for a few days. Saw the Grand Canyon for the first and last time. And then I went to Washington, D.C. to see the cherry blossoms and visit my daughter who's in college over there.
Last time, so not a big fan of the Grand Canyon, I'm taking it?
It was a whole lot of effort for a big hole in the ground. It's majestic, but I know I've heard of people that go there every year and do the same hike and everything, but it was wonderful to see. If I ever go see it again, I'll probably take a helicopter from Vegas or something, or do a tour like that to get a different perspective. So wasn't bad. It's just not repeatable.
I did the tourist thing myself. I hit New York City, did the old pretzel, did the observatory on the World Trade Center, did all the touristy bits. 24-hour whirlwind through NYC, which was kind of fun out there. Missed our buddy, the Flow Master. I'll have to reconnect with him on my next trip. As we reconnect, listeners, with a little bit of the old Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, where we highlight the upside and downside movers out there, not just from an underlying, but also from a vol perspective here. This week over at CME Group. Looking at the overall underlying movement report, looks like we're slightly biased towards the red. I would say 55-45, maybe 60-40 red over green out here on the week, at least from an underlying perspective. We'll get to vol in a second, its own separate beast out there. But before we get there, Mr. Rhoads, where should we kick off our journey this week? To the light side or to the dark side, sir?
Let's get the dark side behind us, because I think the light side's more interesting.
All right. What's the old saying? Put that dark side behind us, listener. Let's do that. Let's go out there right now to a little bit of the old dark side. Get ye behind me, dark side. There we go. As we go out to number 5, we're kicking things off in the equity space, but not the full S&P. It's going to be the real estate sector of the S&P, off 2 1/3% this week. Coming in number 4, keeping it in the equity sectors, it is the healthcare sector, off 2.73%. So kicking things off, a little bit of equity sectors. Number 3, off to the rates, our old friend, the Ultra 30-year, rearing its ugly head yet again, off 2.79%. It was number 4 in the other direction last week, up exactly 2%. So intriguing little swing there. Number 2, our old friend Bitcoin, giving up some of the luster, off 4.35%. Before you get all hot and bothered, we checked, we ran the numbers, 1,100 contracts on the tape for the big Bitcoin options this week. So probably not going to be sinking our teeth in out there. And the number 1 dark side mover this week is oats. So going off to the ags, off 6.02%. Again, you know the deal with oats. I'd be surprised if there's 5 contracts on the tape. So not going to sink our teeth out there, listeners. Instead, let's keep on rolling and go to the light side, which Mr. Rhoads said is a little bit more exciting this week. Number 5, kicking it off in energy, it's heating oil, up 3.36%. Number 4, a little bit of metals action. I got a feeling we're going to see some more metals popping up in a second. Number 4, it's platinum, up 3.51%. Again, platinum, the P metals, not known to be bastions of volume. Platinum doing 5,000 contracts so far this week. So moving, maybe not shaken from a volume perspective. Number 3, we go from the metals off to the ags. In particular, it is the livestock, lean hogs, up 3.77%. It was in the same exact spot last week. It was number 3 to the upside last week as well, up 2.17%. So a good couple of weeks for lean hogs, up about 5% over the last couple of weeks. Actually up about nearly 6%. Then, number 2, back to the metals, we go to copper, listeners, up 5.86%. And copper having a bit of a banger week, 69,000 contracts on the tape. That's fairly robust. Gone, a distant memory, are the days when copper is doing a few thousand contracts a week, and it's kind of a sleepy surrogate for China. These days, copper, quite the option story, so we could certainly sink our teeth in there. And then the number 1 light side mover, you know it, you love it. Uncle Mike was just raving about it on the option block about an hour ago. It's silver. He says it comes like a thief in the night sometimes, and it is coming this week, up 9.33%. Lighting it up on the volume front as well, 129,000 contracts on the tape. So I have a feeling, I don't know, listeners, little birdie on my shoulder, maybe telling me maybe a little bit of the shiny stuff going to make it on the show this week. Maybe we'll get base. Who knows? You never know where we're going to go out here on the show. But before we do that, Mr. Rhoads, to the world of CVOL we go. Where should we commence our journey this week? To the light side or to the dark side, sir?
The dark side means that something's getting boring. So again, let's get the boring out of the way and talk about the light side.
Why don't we reverse hats for a second? Why don't I let you run the CVOL? Can you handle that, sir? Can you read off a
Can I
list
handle the
in
CVOL?
order?
Let me see. I got, let me make sure I'm doing this backwards.
Yeah, you got to do it backwards. It's challenging. Top is the number 5.
Do I read the table from the top or the bottom?
From the top, sir.
Okay, from the top. So number 5, Mexican peso chiming in at 8.79% implied volatility, down 0.31. Is that in volatility points or is that a percent?
That's coming off the vol.
Okay, all right, that's coming off the vol. Okay, well, energy, the EVL, I'm assuming that's the energy sector ETF, got a little bit of a crush there, but it's up at 45.25 still. Down 63. Soybean oil down to 31.98 from about 32.50 this time last week. And then my favorite trading instrument, because I almost got beaten up once on the floor of the CME group for brushing up against the whiteboard that they put the prices on. Class 3 milk. Used to just open it up by appointment for a few, for an hour or so.
How many hours does it
anybody
trade?
Want to trade milk? Anyone want to trade butter? And then it closed. So it's down to 1870, down from about 1940 last week. And then finally, the big crush, and I'm kind of surprised at this one, is natural gas. The implied vol is still up over 58. But it's down. It's down from 59, about 59, 57 this time last week. So dark side, a couple of things with really high implied volatility that have come off a bit. Surprised, maybe, I was on with Carly a couple of weeks ago, and she was talking about, I'm going to put words into her mouth here for a second, but she was talking about natural gas. And what I got from her was there's no big rush to buy it, but there's probably not a lot of downside from here as well. And I think natural gas is about where it was when we talked about it a couple of weeks ago. So maybe this is a new range for that contract for some time. And the lower implied vol on the CVOL index is indicating that as well.
Make things a little easier for you now. We'll go from the bottom to the top. How's that? Not reverse order.
Yeah, no, it's and nobody sees the notes that you send me, but the notes didn't have what order they're in. But now I've figured it out.
Not so easy, this big hosting share, is it, sir?
It's not so easy. I did it once, and I had to take a 2-day nap afterwards. It was so stressful. I like that I'm your Joan Rivers, though. I really do. Let's hope we don't break up like she and Johnny did.
You just don't chain smoke enough to be my Joan Rivers, sir.
So the number 5, working our way up to number 1, the only non-shiny, unless somehow 3-month SOFR can be shined, but the secured overnight financing rate is what SOFR stands for, so it's an interest rate market. The implied volatility, the CVOL index is at 79.06, up 1.25. Now everything is shiny. Gold up 142 to 1720, and then third, just the metals. And again, my assumption is this is the metals sector. It's at 1916, up 189. Copper and silver, they were leading on the other one, and they're leading on the light side here as well. Copper at 2468, up 374, and silver. I don't closely monitor silver implied volatility, but I would not be the least bit surprised if this is really close to the higher end of the range for this contract. In fact, because it's at 36.48 and it's up almost 5 points on the week. We've got a little trend indicator on here, and every day is green on the trend indicator. So it's just doing nothing but working itself higher. And as you said, as Uncle Mike said, silver will sneak up on you. Silver has been in a range, and I will bet you yesterday some people got caught short because that sure looks like a short squeeze on the chart.
Yeah, metals just dominating the tape this week. Almost the entirety of the light side on the vol front and indeed almost the entirety of the light side on the underlying movers and shakers as well. So no surprise, we have to start in the metals first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's do it. To the shiny stuff we go. Go into that cmegroup.com/TWIFO drop down. Once you're there in asset class, you're going to go almost all the way to the bottom, one above the bottom. The bottom would be the CVOL indexes. We're not going there. We're going to the metals. And then from there, it's kind of an embarrassment of riches. Like I said, just lighting up the tape out there on the shiny stuff and on the base side. Copper doing 69,000 contracts. Silver doing 129,000 contracts. And gold, usually good for 220, 250. This week, 429,000 contracts on the tape for gold. So I think, Mr. Rhoads, we should probably start there. What do you think?
Absolutely. It's the main one, although I think silver's got a fun story too. But let's start with gold.
Silver has a fun story. We will indeed get there. So Uncle Mike, if you're listening, just stay put, stay patient for a little bit. But yes, gold popping off hard this week, listeners. At a whopping 23.20 as we're kicking off the show, up about 82 handles, or about 3 2/3%. Again, that's just since Monday out there. So popping hard out there, and obviously dominating our CVOL out there as well. So you don't usually talk gold and vol in the same sentence very often. So when you do, you know, things are looking perhaps a wee bit frothy, a wee bit effervescent out there. In terms of action, like we said, 430,000 almost contracts on the tape right now. Of that, nearly 29% going up in the June contract that has about 54 days to go. So a little bit longer term, a little bit farther out than we're used to going in a lot of our products out here. But nonetheless, intriguing stuff. That vol out there, it's a 1486. You might say that's not a lot, but it's up over 2 points, about 2.1 points from where it was this time a week ago. So again, 2-point move in gold vol, that is nothing to sneeze at. Gold getting juicy, gold getting frothy, gold, dare I say it, a banger out there. Let's see, SKU-wise, nobody wanted the puts last week, 6.7% cheap. That continues to be the case this week. 8.8% cheap are the puts now. They're even less desirable than they were a week ago. But you know what people want, listeners? It's the calls. 10.6% bid last week, 12% bid this week. Puts cheaper, calls more bid. Yeah, it sounds like a precious metals skew to me. Mr. Rhoads, what is catching your eye out there in the land of the big dog, the king of the shiny stuff mountain this week, sir?
It's definitely the skew. If you're and you know, the call implied volatility being elevated relative to the put implied volatility, which it appears to me like it's pretty much across the board, unless I'm missing a number here. I keep going down. I have not found an instance yet. And the way that I utilize implied vol in the term structure with commodities, I know I sound like a broken record on this show, but when it's really high and we're moving in the same direction that it's really high, in this case, we're moving up, we're making new highs, and the implied vol on the call side is much higher than the implied vol on the put side. If you're thinking about stepping in front of that trend, you're probably going to have a better chance to do it, or at least one with a bit more confidence. But right now, everything I see just indicates that gold is going to continue to climb to the upside.
Yeah, they like themselves a little bit upside. I mean, it's not unusual for gold to have a bid to the upside, but you're right. It is. Mm-hmm. It is.
It's extreme.
Yes,
that's a good word.
It is.
It's kind of extreme.
Resilience to the upside out here, which is kind of fascinating. Unless you look at the March 2025 expiration cycle, it looks like something funky was happening there. It was 27% cheap a week ago, and now it's 5% bid. So something weird afoot out there. But outside of March 2025. Things are looking frothy out here, listeners. You're north of 10% bid just about everywhere you're going to look. You get out to Dece of 2025, those calls are 22.8% bid over the at the money vol, which is about a 14.5. So that's looking pretty rich. But again, it is gold. People like to buy the upside in gold. They have done so since the dawn of time. They will continue to do so, it seems like, this week, which is probably why the 2300s here in June are leading our dance this week. Again, about almost 13,000 of these on the tape this week. Interestingly enough, it seems like folks are bailing on these, which again, that future's at a 2320, so that does make some sense. Maybe a lot of people past his prologue are probably long the upside. When we blow through the strike, folks are getting the heck out of Dodge, taking their money, maybe rolling to another strike, or maybe just taking their money and going home. Either way, the big day was Tuesday. 4,600 contracts on the tape, 3,500 on Wednesday, 3,200 on Monday, 1,500 today, pretty much closing all week long. That is kind of interesting against an OI of about 13,000 coming into today. So they could be closing again today as well. The only day where they were opening on a higher strike looks like was Monday. They opened about 1,000 of the 2,400s and about 1,300 of the 23 halves. So potentially a roll from the 2,300 up to those. But intriguing stuff because they were closing right behind it on also the 2,400s throughout the rest of the week as well. Took off 4,000 on Wednesday, took off 3,000 on Tuesday, and looks like trading another 1,500 today. So maybe a bit of a vertical action going up today, 23, 2,400, because their numbers are about the same. Worth noting, only about 5,400 contracts open. So folks bailing on the upside in June gold, which is kind of interesting. Again, that skew is juicy, so they're kind of getting rewarded to do it, which is kind of fascinating. But again, you get some profits if you have some upside and you blow through your strikes. You could be forgiven for taking those off. Then we go to the other side of the coin, listeners, the very near dated, less than 1 day to go contracts expiring tomorrow. That future, again, we said 2320. It's the 22 half puts. These were leading the dance all week, including 3,800 going up on Wednesday. A total of 7,400 have traded all week, so more than half going up on Wednesday, mostly opening there. Who's opening on the 22 half puts on Wednesday of this week that expired tomorrow? Intriguing stuff. 1,200 on Tuesday, almost 2,000 going up today. Again, these go out tomorrow, listeners. That's against OI of 3,000, so maybe they're bailing on some of these. But intriguing stuff. Let's look here really quickly. These puts got a little bit cheaper, so maybe some folks are just overriding the heck out of these. Maybe they're starting to get a little bit of some equity flare out here, just blasting away at near-dated puts. Either way, nearly 7,500 of these things have traded so far this week, so a pretty hot strike. We don't see a lot of near-dated, out-of-the-money puts going fast and furious here in gold, but that is exactly what we're seeing out here. I'm just going a little bit farther out. Usually, if you go a little bit longer term, listeners, you could see some funky upside paper. How about some July 2,500s? Does that float your boat, listeners? It floated someone's boat to the tune of 4,300 contracts out here this week, listeners. Looks like most of that going up on Tuesday. 2,500 on Tuesday, 1,300 on Wednesday, opening both days. Intriguing stuff. So 2,500s in July. What do you think, listeners? Do you like those? Looks like 24 halves were also opening those same days, so could be some vertical action afoot there as well. Intriguing stuff, Mr. Rhoads. Any of that paper surprise you, and did you spot any interesting nuggets out here in gold options this week?
It surprises me, and then it doesn't. When you were talking about those puts, and I wouldn't be surprised if people are taking advantage of the higher implied vol and selling puts to, because even the higher implied vol on the call side, if you're looking at near strike puts, it's going to bleed over to that a bit. And then you mentioned that what I started digging around on was the March of 2025 options. The open interest across the board for out of the money puts is about 300 contracts. So I wouldn't read a whole lot into. I wouldn't like take a look at that the juice in the March 2025 put on the March 2025 put side of the equation. I wouldn't read too much into that because it's on very, very light volume. It doesn't mean somebody's targeting much lower gold prices at that point in the future.
Illiquid name. It certainly seemed like something weird was afoot out there, listeners. By the way, Dees 3000s also trading this week about 5,300 times. 3,000 of them going up opening on Wednesday. So, and 1,900 today against an OI of 7,600. So, Dees 3,000 listeners, you like that? Are you overriding that? I'm curious What are your thoughts? Since we're hanging out in the metals and because so many folks are obsessed with the number 2 in the shiny stuff right now, I believe Mr. Rhoads referred to it as a potential short squeeze out here in silver land. Let's get into it. Of course, silver trading 27 3/8 in that front future. Been a while since we've seen those levels. Like we said, up about 2.5 points or nearly 10% on the week just since Monday. If you go out to our movers and shakers, it's up about 9.33% since the show last Thursday. So a good time for the silver bulls, and also a good time from a volume perspective, listeners, because silver lighting it up this week to the tune of 122,000 contracts. Mr. Rhoads, what are your thoughts on silver? A few years ago, we had this talk of the great silver short squeeze. Remember back when everything was getting squeezed back in, that didn't really materialize. Are you starting to sniff that now? Is that what you're saying?
Well, I'm not saying that. And that one was so funny because it was the same. That one was number 3 that they were going to go after doing it effectively with AMC and GameStop. I remember that was announced over a weekend that they were going to do it. And
a little bit of a different beast, the silver market there.
Yeah. They didn't quite understand that. And they were going to go after the ETF. But they didn't quite understand that there's a huge liquidity pool and a bunch of other instruments that you're also going to have to try to squeeze higher. I think this one's legitimate. I think there are a lot going on in the world, and it's not like silver is in a vacuum moving up by itself. Gold would have been number 6 on the mover and shaker to the upside, and of course copper's moving up as well. And if you think about it, silver is kind of a hybrid of those two. It's got institutional uses and it's got some precious metal uses as well. I almost feel like silver's half precious metal, half industrial metal. But I've heard people talk about silver. I've heard people talk about how it's range bound. You sell it when it gets up about 24, 25. You can buy it when it gets around 20. And again, I'm using the silver ETF prices, but eventually you're going to break out in one direction or another. And if you have a lot of folks that are conditioned to sell silver short at 24.50, 25, and they look up and all of a sudden we've got a 26 handle and now a 27 handle, they don't have to buy, but they're probably advised to go ahead and cover that short to live again for another day. But the price action on the chart really looks like yesterday was quite a short squeeze, and we're getting a little bit of a follow through today.
Let's see what kind of follow through we are getting out there. Listen, like we said, 122,000 contracts on the tape. Of that, 30% exactly going up in the May cycle that has about almost 21 days to go. But actually, for our most active contract, we're not going to hang our hat out there. We're going to go a little bit farther. Listen, we're going to go out to July. Actually, I take it back. We're going to skip July. We're going to go to June. We're going to go to the June 27th. By the way, that is an in-the-money contract right now. The June future at about 27.57 right now. So intriguing stuff out there. What is the vol, you might be asking yourself, out here in the June expiration cycle? And it's fairly robust, I think, to put it mildly. Hence all these metals on our CVOL movers and shakers this week. 28.5, up 5.25 points. That is a lot. That's a lot of juice coming in to any precious metal, in particular silver. Again, the metal's not known for being bastions of vol. So when you see moves like this, there are perhaps intriguing things afoot out there. And skew-wise, the puts last week, 6.7% cheap. Kind of unched on the week this week, 6.8% cheap. Actually, that's, I'm looking, 6.8% cheap. The calls, though, the calls are where the action was. That's where the action usually is. Pretty much out there, listeners, in any sort of precious metal out here. The calls last week, 11.8% bid. So folks lining up on the calls, you can't argue. It was a pretty good do, as they say. This week, still bid, not quite as lofty, 9.6% bid. And leading the dance, like we said out here this week, it was the 27 calls out here in June, doing 5,100 contracts this week. Most of that coming on Monday and Tuesday. 2,700 on Tuesday, mostly opening. 2,700 on Monday, 1,600 on Tuesday. Again, opening on pretty much both of those days out there, listeners. 650 on Wednesday, slightly closing there, only like 100 and change trading today against an OI of only 579. That's kind of interesting. Opening all that earlier in the week, but not much OI to show for it. So maybe a little bit of a churn and burn out here, which is kind of fascinating out here. But what else do we spot out here in silver? Again, the 27's kind of dominating the tape. Right behind it, we have the 30 calls in July, also pretty active, going up about 36, almost 3,700 times this week. So again, as kind of Russell alluded to, it is all upside all the time out here in the shiny stuff. The big day for the 30s was Wednesday, 1,600 going up, opening there, 1,001 also opening there, and 982 today. That's all against an OI coming into today of 4,600. So folks, opening on the 30s in July, opening on the 27s in June. Again, listeners, it's a precious metal, so you're going to get some funky upside. How about, let's really dial it up. Let's go to the DEES 50s, the DEES 50s, listeners, because it's a shiny stuff product. You know, some funky upsides trading. And we got the DEES 50s going up nearly 3,000 times this week, listeners. My goodness. Almost 1,000 today alone against nothing else. Nothing else is trading out there. So just straight up DEES 50s trading for size nearly 1,000 times against an OI of 4,300. 850 on Tuesday. 550 on Wednesday. Worth noting the 32s traded 1,600 times on Wednesday for whatever that's worth. That'd be a funky spread, 3,250, but we've seen weirder. Also, the ratios don't make much sense, but we've seen weirder stuff. Again, 850 of the 50s trading on Tuesday, 700 on Monday. Again, opening all week long. Mr. Rhoads, why are you buying so many DEES 50s out here in silver? And what else, if anything, is catching your ie out here this week, sir?
Well, it's the end of the world as you know it, and you want to hoard metal. So, no, I'm not buying the DEES 50s. You know that. I made a comment earlier about, so, you know, when you're talking, I'm always digging out some other numbers, and you know that. And I was taking a look at the silver CVOL index, and we're right up against the higher end that this thing has hit in the past. But what's interesting about it is we've had bigger spikes associated with the same kind of moves, and we're seeing a higher CVOL index, but not necessarily it's not as dramatic as it has been the last couple of times we broke above what looked like resistance. And we've even had it, I think there's a case over here back in 2021 where the CVOL index was up around 50 or so. Based on a very short-term, quick move to the upside, and it was even the last time we broke above above resistance like this, the CVOL index climbed to 50 once again. I don't know if it's we've become conditioned that it's a range-bound thing, and even though it's broken out to a near-term upside, there's just not a lot of believers that it's showing up in the call implied vol versus the put implied vol, but it's not showing up in the absolute level of the CVOL indexes. So another reason I think maybe we've got some more upside in silver before it backs off.
Speaking of more upside, there is more to be found in the metals. We're going to tick out of the precious metals, though, listeners. So go back to that asset class drop down. Go to the product side, pop out a precious. We're going to go one down. We're going to get base. Time to get a little base here on the old TWIFO program, listeners, because we're going to talk about copper. Coming in the start of the show, it's at about 422, up about 21 cents or about 5.4% in that front future. As you mentioned at the top of the show, too, just a banger week for copper. Nearly 70,000 contracts on the tape right now. So I'm hard-pressed to think of another week where we had numbers like this out here in copper. It's been a little while. So intriguing stuff. And again, in the early days of this program, copper was and also ran from an options volume perspective. To seeing 70,000 contracts is nothing to sneeze at. Of that, 35% listeners going up in the May contract has about 21 days to go. So we'll take a look out there from an overall vol perspective. What is copper vol right now, you might be asking? It's healthy. Again, all the metals vol looking healthy this week. 22, almost 2260, up about 5.5 points. Again, vol is popping hard. Hence the metals domination in our CVOL this week. Listen up. Metals are fascinating to watch. They kind of languish from a vol perspective, and then bam, you get a week like this where all of a sudden the vol is moving and shaking. Let's see if the skew is following suit, listeners. Last week, the puts 5.9% cheap. Nobody really wanted them. This week, they want them even less, 6.5% cheap. And the calls, that's where the action is, 7.8% bid last week. This week, a whopping 10.4% bid. So the calls looking juicier. The puts looking cheaper. Mr. Rhoads, I know in the past, copper has been pretty much the bellwether for Chinese economic demand and economic health out there. How much time do you spend watching copper, and what are your thoughts on what we're seeing out there this week?
I spend a lot of time watching copper. It's often been a leading indicator with respect to economic activity. And it used to be one of the best leading indicators with respect to what's going on in the overall economy. The way that it's acting right now, I don't know if I feel like some of the moves that we're seeing, especially in the metal sector, have to do with everybody getting their ducks in a row before we fight. And I know it sounds terrible, but if China, to make stuff, China's got to bring in as much copper as they possibly can. They have to outsource all of that stuff. And I wouldn't be the least bit surprised if they have something to do with the much higher prices of both copper and silver right now. The commodities that we see moving and the ones that were on the upside movers list, a lot of those are the kind of things that you want to load up on if you're worried about not being able to buy them at some point in the future, either due to supply chain disruptions or just higher prices, period. So it could be people worried about inflation, or it could be people worried about geopolitical risks, or it could be people going, you know what? Either one of those or those together could result in a pretty bad situation as far as trying to get the stuff you need to make the stuff. And that's what I think about when I look at copper. I don't think this is an indication that the Chinese economy is recovering. I think if they are behind some of the buying, it's more geopolitical and making sure that they have what they need to build the things that they do need in case sanctions or something else comes down the line.
Getting our ducks in a row before we fight, taking a twist, taking a turn to the dark side here. Wow. Mr.
I'm
Rhoads.
Going super dark on that, but it just doesn't look good out there.
Dark turn here on TWIFO. Listen, all this copper action ahead of a global raging battlefront that Mr. Rhoads is predicting here on TWIFO.
Proxy wars all over the place instead. How's that?
All right, that's better. That's a little better. A little bit of proxy heat that doesn't boil over onto the global stage. What are your thoughts? Are you watching copper more these days, listeners? It certainly is an intriguing product. As I mentioned, 35% going up in the May expiration cycle, but that's not where we're hanging our hats this week, listeners. Kicking things off, though, are the June 4 halves. I said we're at about 422. Actually, the June future's at about 425. So either way, the 4 halves, not that far out of the money, but looking a little bit to the upside here. It was the 4 halves going up about 3,100 times this week that dominated the tape. Right behind it were the 440s, also going up about 3,000, almost 3,100 times this week. You might say, okay, probably a bit of vertical action because the numbers are pretty much in lockstep. But outside of today, that isn't the case. Today we see looks like about 1,800 of each trading. So could be a bit of a roll. Actually, it's opening on both because there's only 1,400 of the 440 calls open, and there's about nearly 4,000 of the 4 half calls. So 440, 4 half vertical doesn't seem like a roll. If it is a roll, they're opening to the 440, so they're rolling down, which would be, again, kind of weird, but we have seen weirder things. These were trading all week long. 500 of the 4 halves also trading on Tuesday, 760 on Wednesday. versus 1,000 of the 440s on Tuesday. Again, opening on all of those, and 1,800 today. So, yeah, funky stuff out here. 440, 4.5 in June, kind of leading the tape. And then right behind it, we have the 420s. So if 440 and 4.5 a little bit too rich for your blood, a little bit too out there from a strike perspective, the 420s also in June doing about almost 3,000 this week, 2,700. So again, weirdly symmetrical paper, but all going up on different days. The big day for the 420s was Wednesday, about 1,400, again, mostly opening there. About 800 today against an OI of 2,100, 500 on Tuesday. A big whopping goose egg on Monday for the 420s. So the 420s, the 440s, and the 4.5s in June were trading all over the place this week, mostly opening, but doesn't look like, except for today with the 440s and the 4.5s, like it was a lot of vertical or roll action out here, which again is kind of weird, but it is the metals. So we know the metals sometimes can deliver on the weirdness front. And then behind that, we have 2,500 of, again, going back to the most active cycle, the May cycle, 2,500 of the 440 calls in May, lighting it up this week. About 1,400 yesterday and about 1,100 today. So there you go. That's your 2,500. Nothing much trading the rest of the week. Opening yesterday, anyone's guess as to today is about 2,400 open on this strike right now, so they could be opening again today as well. 440, clearly a popular strike out there with the folks. Not surprising, folks bailing on the 410s this week as well, about 2,200 times. We kind of blew through that strike, so it makes some sense they would take it off, maybe reposition to a higher strike. Could be a bit of a 410, 440 roll on Wednesday, in which case doing more on that second leg would probably be indicative that they made some money on that trade, and also the fact that if they were long the 410s and we blew through that strike, that would also stand to reason that they're sitting on some profits. I'm just scrolling really quickly because it is a metal. You never know what other kinds of weird, aberrant, far out of the money paper you're going to see. Let's go all the way out to D's to 2025, listeners. That future is at a 436 right now, and it was at the money, the 435 calls, going up a whopping 1,000 times, all opening, all on Wednesday. That's it. The rest of the week, a whopping goose egg. But today, 1,000 of the 435. So, Mr. Rhoads, I ask you that same question. Why are you buying so many of the Dees 435 calls in copper, sir? Dees 2025.
I'm not buying the Dees 435 calls in copper, but you were talking about those June 440 calls. It looks like a big portion of them were purchased at 4 and 5, and now you could sell them for $9.50. So
not a bad do, as they say.
Just I was doing a little tape reading while you're talking, and it looks like the demand for those, they got some pretty good prices because they were also trading on the offer. So there you go. And now a little bit starting to trade on the bid, but it looks like the aggressive buyers buying them on the bid a few days earlier this week, they're very happy that they did that. G.I. Joe, Kung Fu Grip, all that fun stuff.
There you go, listeners. Aggressive buyers to the upside, working out in a week when the metals are rampaging. Let's see what you folks are up to, though. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to it. Let's start with a question of the week from last week that's very relevant to this program. We asked you, as Q1 drawing to a close, which areas of the market have you the most excited for the rest of the year? We gave you 3 choices and the infamous other: equities, crypto, vol, and then other. A lot of you writing in on the other for fixed income. Not exactly working out that well this week so far, but intriguing other nonetheless. And Mr. Rhoads with 43.3% of it. The vol gods took it followed by number 2, crypto at 30%, and then bringing up the rare equities only 20%, sir. As a vol guy, does that surprise you? Does that excite you? And what are your thoughts of how this poll broke down, sir?
It excites me that everybody's thinking about volatility. Now the next question needs to be, are we going to be long or short it? I assume that the attractiveness of volatility for the balance of the year is on the long side, because being all excited about volatility on the short side is like getting all excited about, getting to first base on bunts over and over and over again. It's just not the short side's not the exciting part. So my assumption is a lot of people think it's going to be a lot of volatility over the next 9 months. We got a lot of things facing us down. We haven't even mentioned we're 47 minutes in, and we haven't even mentioned that there's a presidential election this year. And you've got to assume that that's one of the things that has people looking at volatility. I know that it's not vol views, but if you look at that October VIX, that thing is a nice premium relative to the other futures, based on all the uncertainty that we're expecting going into this fall. So I'm not shocked at volatility. I do got to share a funny story. A student came up to me at the end of class last night and asked me if I'd ever done anything with trading VIX stuff.
Did you tell him, in certain circles, I'm known as Dr. VIX?
No, I didn't say that. I said, no, I did a lot with VIX. And then I just pulled up my Amazon page.
Have you ever done
so, yeah, and he was like, oh, I guess you have. So I just thought that was kind of fun.
You're like, tell me more about this.
I keep my academic and my professional lives pretty separate.
Tell me more about this VIX thing you speak of. What is this? Tell me more.
What is that? Vapor rub?
Yes, exactly. I love the little bit of the old VIX vapor rub. Well, there you go, listeners. Are you part of the vol bonanza? Are you loading up on upside? Are you, as Mr. Dr. VIX saying, maybe taking those little bunts? Those bunts can add up over time, too. Not going to besmirch those at the end. That's been the way to go for the better part of this year. So intriguing stuff. Let's get out to our question of the week right now, Mr. Rhoads. It's a contentious one. We're asking folks pretty straightforward. How are you approaching the broad indexes right now, in particular the S&P 500? Are you going straight long, so you're in the ride or die crowd to go up or go broke? You're going long, but maybe you got to put in your back pocket for a rainy day. You got a little bit of hedge action on, or maybe you're not even going straight long anymore. You're going to go maybe a long call instead, because maybe you're a little bit skittish, or maybe you're going the stock substitution route. Again, you want to play to the upside, but you're a little bit worried about some downside, or maybe you're fully out. You're sitting in cash. Mr. Rhoads, if you have a vote, have at it. And then B, where do you think our audience is falling?
Well, if I have to choose among those, I would say cash right now. But typically when we're making new highs, I'm pretty close to out of the market, and I'm out of the market right now. I just feel like there's going to be a better opportunity to load up on stocks at some point in the future. Actually, if we get a big, massive sell-off, I'd probably go into small caps, because at some point they got to do more catching up than they've already done. But the question wasn't about that.
We didn't say what index would you substitute in, but that could be a good further poll, a poll down the road, Mr. Rhoads. But once again, you have your finger on the pulse of our audience, sir, because they're with you. They're a little bit skittish right now. 36.7% saying they're out. They're sitting in cash, just like the once and future. Our audience tends to lean a little bit bearish, a little bit cynical. They've been fading this rally for a while. But right now they're out. They're saying it's feeling a little bit too top heavy for me. Followed by number 2, 31.7%, saying you're still in, but you got to put in your back pocket for a rainy day. 31.7% saying you're long but hedged. 25% straight long, ride or die, go up, go big or go home, listeners. And then 6.7% only right now coming down on the long call or the stock substitution. I thought those would get a little bit more love, but at least for right now, you got about a day left to make your voice heard, listeners. Right now, not getting a ton of love. All right, listeners, that music means we're winding down here on the old TWIFO program. Before we go, Mr. Rhoads, as the once and future Dr. VIX that you are, you did float an interesting suggestion at the start of the show. which is an intriguing one. I'm not sure logistically how we would pull it off.
I don't either. That's why I didn't bring it up while we were. That's why I typed it to you.
Let me float it here to the listeners.
I didn't want to, but the idea was, and it could be a couple of ways, but we do the crystal ball, which I think I'm doing tomorrow, on VIX every week on that program. And now that we've got these volatility indexes, the CVOL indexes, I was thinking, should we do a crystal ball? But the problem is you got to figure out, what are you going to do? You're going to do, is it this week silver because that's the highest one? There's a lot more to work out, and that's why I typed it to you at the at the beginning of the program, as opposed to trying to have a discussion about it now. But maybe the listeners will have a good idea around that one.
Yeah, that's why I bring it up. Listeners are full of good ideas. And unlike VIX, which is kind of a fixed point, you can kind of circle back at it week in, week out on vol views. We have an embarrassment of riches on the CVOL front here, listeners. Literally everything that trades at CME has a CVOL. So maybe we go the aggregate route. I don't know. I mean, if we go the hot thing every week, you're going to be jumping from thing to thing every week. It's going to be challenging for the listeners to keep up, let alone our guests and myself. Got to think about me at the end of the day. It's challenging for me to keep up on all that as well. I'll have to dial in my models for many and varied things like Chicago wheat, and then lean hogs the next week, and then heating oil, who knows. So we'll probably have to narrow down some of the windows. Maybe we only go for the aggregates. It doesn't make sense to just do equities because we do that on the vol views, so that would be kind of repetitive. Yeah. So I don't know. I don't know how it would work. I am open to the idea, Mr. Rhoads, but I want to put it out there to the listeners. If you're listening to this, if you would like some sort of crystal ball type contest to make its way onto TWIFO, hit us up. Let us know your thoughts. Are you interested in that? Well, how should we do it? There's literally an embarrassment of riches to choose from. So how would we make that happen? I am intrigued, but hey, never let it be said I am closed-minded to intriguing ideas out there. And Mr. Rhoads, if folks want to share with you their intriguing ideas, or perhaps you want to share with them, where should they go? What should they do?
Well, I gave myself a week off from doing I really needed a week off from doing my Substack blog, but I will be ramping that back up Saturday and Sunday, doing a review of what happened in the previous week and a preview into next week. Anything I do, I put out on Twitter. I see that I'm on Twitter a bunch talking to you right now. My Twitter handle is my full name, RUSSELL, RHOADS. I'm not RHODES. That's some guy down in Tampa that's a news reporter. Sometimes people tweet at me about him and vice versa. But that's the main place. I'm not appearing anywhere in the near future. I'm actually getting ready to hunker down and not travel and finish a couple of books. That's really, either I'm going to finish the books or not finish the books. And I'm taking myself off the road, and I'm going to finish writing a couple of books.
There you go. Then your students can finally know that you are...
And they'll know who I am.
Yeah, exactly. They'll know that you are associated with Vol out there, listeners. In the meantime, listeners, if you want to check out Mr. Rhoads, follow him on Twitter. Don't follow the weatherman from Miami or whatever. Don't blame Russell if the forecast is wrong. Not his fault. But you can go to cmegroup.com/TWIFO. Of course, mess around with those CVOL as well. CME, very keen to get folks engaged around CVOL these days, which, again, vol is intriguing. It's not just about equities anymore, listeners. It's all over the place. So check them out. Just type CME and CVOL into your browser. Of course, we put out that data for you at the start of the show as well, the movers and shakers report on all things CVOL. So you, too, can sink your teeth into that fun. And think about that. How would we do a crystal ball type contest here on TWIFO every week? It's intriguing, but also challenging, which makes it fun. And of course, that's going to do it for us on the network this week. Back again tomorrow, noon Central, 1 p.m. Eastern, talk a little bit of vol. I do believe my good buddy, Mr. Once and Future Dr. Vix, will be joining me tomorrow. So if you're on the Pro, you want to join us live, that'll be popping off at noon. After that, speaking of the Pro, coming back for a little bit of the old options oddities to close out the week, as we are wont to do. If you want to check out the Pro for yourselves, only one place to go, theoptionsinsider.com/pro. And back again on Monday for a little bit of the old OB all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.